Hello, everyone. Welcome to another insightful episode on Bonis Life Channel. I'm Boni. In this episode, I provide invaluable insights on how to trade successfully in 2025. If you've been in the market recently, you've probably noticed that crypto is more unpredictable than a politician's promises. One day we're soaring, the next we're in free fall. So, how do you successfully trade in this wild 2025 crypto market? Stick around because today I'm giving you the ultimate strategy guide that both beginners and pro traders can use to stay ahead and profit. Risk management, protect your capital. Before we talk about making money, let's talk about not losing it all in one bad trade. Golden rule number 1. Never invest more than you can afford to lose. Golden rule number 2. Use a stop loss strategy. Because trust me, crypto will test your nerves. Golden rule number 3. Diversify. If all your money is in one coin, you're not investing, you're gambling. And here's a pro tip. Keep some of your portfolio in stable coins, USDT, USDC, D. They act as a life jacket when the market starts drowning in red. How to spot trends and trade smart. Now, let's talk about when to buy, when to sell, and when to just chill. How about technical analysis 101? Check support and resistance levels. These tell you where to enter and exit trades. Use moving averages, 50-day, 200-day EMA, to confirm long-term trends. If the relative strength index, RSI, is above 70, the market might be overbought. Consider selling. If it's below 30, it could be oversold. Potential buying opportunity. What's moving the market? Fundamental analysis. Regulations, inflation, political drama, all these affect crypto prices. Keep an eye on big events like Bitcoin halving, government crypto policies, and major institutional moves. Don't trust hype. If something sounds too good to be true, it probably is. Consider global events and their impact on crypto. Right now, there are 3 massive events shaping the market. 1, the US crypto reserve. Trump's plan to create a national Bitcoin reserve has everyone talking. But is it bullish or just political theater? 2, trade tensions and market fear. The US is flexing its muscles with new tariffs, and investors are either running for cover or doubling down on Bitcoin as a safe haven. 3, the stablecoin takeover. The Genius Act could put stablecoins under corporate control, and if big tech runs stablecoins, that changes everything. Should you hold, trade, or stake? Now, let's talk about your options as a trader. Trading? Stick to the trend. If the market is bullish, ride it. If bearish, short it. Holding? Long-term winners like Bitcoin, Ethereum, and Solana are strong bets. Staking? Earn passive income by staking your coins, but choose platforms carefully to avoid rug pulls. Oh, and one more thing, don't chase hype coins. We've all seen people FOMO into meme coins and lose their savings. If your coin's logo is a dog, a cat, or a banana, just think twice. The future of trading, AI and automation. Smart traders don't just stare at charts all day. They use technology to trade smarter. Trading bots. Platforms like 3 Commas, Pionex, or Bitsgap can help automate your trades. News alerts. Set up notifications on TradingView and Twitter, X, so you get the news before the market moves. Make sure that you tune in to Boni News Network for informed and unbiased news analysis for decision makers and traders. On-chain data. Check exchange reserves and whale movements to see where the big money is going. The smartest way to trade in 2025. Educate yourself continuously. Never stop learning, because the market never stops evolving. Have an exit strategy. Take profits. Don't be greedy. Think long term. Blockchain is here to stay. So zoom out and see the bigger picture. At the end of the day, the best traders aren't the ones who take the biggest risk. They are the ones who manage risk, analyze smartly, and stay patient. The cryptocurrency market in 2025 continues to evolve, shaped by macroeconomic forces, regulatory shifts, technological advancements, and institutional involvement. With increasing mainstream adoption, heightened volatility, and unpredictable market cycles, successful trading requires a well researched, strategic, and disciplined approach. This guide provides a deep intellectual analysis of the current market landscape, offering insights into technical strategies, fundamental research, risk management, psychological aspects, and long term investment considerations. 1. Understanding the market landscape in 2025. The role of macroeconomics in crypto trading. Cryptocurrency no longer exists in a vacuum. It is deeply interconnected with global economic events. Key macroeconomic factors impacting crypto in 2025 include interest rates and inflation. Crypto markets have historically thrived during periods of low interest rates and high inflation, as investors seek alternative stores of value. However, with central banks tightening monetary policy, liquidity in crypto markets is declining, leading to more prolonged bear markets. Global trade and geopolitical risks. Rising trade tensions between the US, China, and the EU influence Bitcoin's perception as a hedge against currency devaluation. Emerging market instability, e.g., hyperinflation in Argentina or Turkey, has led to increased demand for stable coins like USDT, USDC, and decentralized alternatives like DAI. B. Institutional involvement and market structure changes. The approval of Bitcoin ETFs has increased institutional adoption but also introduced greater price manipulation by hedge funds and market makers. Ethereum's transition to full staking adoption post-ETH 2.0 has made it a serious competitor to Bitcoin in institutional portfolios. The tokenization of real-world assets, RWAs, is now a dominant trend, bringing traditional finance, TradeFi, into crypto through on-chain derivatives, stocks, and bonds. C. Regulatory and legal uncertainty. The US SEC's stance on crypto ETFs, DeFi regulation, and stablecoins will dictate market sentiment. Stricter KYC, know your customer, and AML, anti-money laundering, compliance on centralized exchanges is pushing users towards decentralized exchanges like Uniswap and GMX. Countries such as El Salvador and the UAE are becoming global crypto hubs, benefiting from regulatory arbitrage. 2. Trading strategies, technical and fundamental insights. A. Technical analysis, how to read the market in 2025. Technical analysis remains a cornerstone of short-term trading, but it must adapt to new market structures. Key strategies include trend following, momentum trading. Use moving averages, 50-day and 200-day EMAs to identify bullish or bearish trends. Ichimoku cloud analysis for mid to long-term trend confirmation. Watch for breakouts of key resistance support levels on the daily and weekly charts. Reversal trading, mean reversion, and RSI divergence. RSI, relative strength index below 30 signals oversold conditions, potential buy zone. MACD crossovers indicate trend reversals. Volume analysis, look for volume spikes to confirm price reversals. Market liquidity and order book analysis. Identify whale activity by tracking large limit orders on CXs and on-chain whale wallets. Use liquidity heat maps to anticipate price movement, e.g. Binance, Coinbase order book depth. B. Fundamental analysis, what really drives value? Unlike traditional assets, crypto markets are heavily influenced by on-chain data and network activity. Key on-chain metrics to watch in 2025. Bitcoin's realized cap, SUS market cap, indicates long-term holder sentiment. Ethereum's total value locked, TVL, measures DeFi market strength, whale accumulation and exchange reserves. Sudden withdrawals from exchanges can signal upcoming rallies. NFT market activity and Layer 2. Adoption determines the growth potential of ETH, Solana, and other smart contract platforms. 3. Risk management, protecting your capital. A diversification and portfolio construction. Never allocate more than 5% of your portfolio to any single altcoin. Stablecoins should make up at least 20% of your portfolio to protect against downturns. Layer 1 blockchain investments, BTC, Ether, SOL, AVAX versus Layer 2 scaling solutions, Polygon, Arbitrum, Optimism. B. Stop loss and take profit strategies. Always use a stop loss order at 5% to 10% per trade to avoid large drawdowns. Implement take profit levels at 20%, 30% increments to lock in gains. Use a risk-reward ratio of at least 1:3. For example, risking 100 to make $300. See leverage and derivatives trading. Handle with caution. While perpetual contracts perps offer higher potential gains, over-leveraging can wipe out accounts. If using leverage, stick to 3x, 5x max leverage and set tight stop losses. Monitor funding rates. When they spike, expect price reversion. 4. Trading psychology and behavioral edge. A. Managing fear and greed. Extreme greed leads to FOMO, and extreme fear leads to panic selling. Use the Crypto Fear and Greed Index to gauge market sentiment. Develop a trading journal to track decisions and improve execution. B. Emotional discipline and patience. Stick to your strategy. Don't chase pumps or panic sell. Avoid revenge trading. One bad trade should not dictate the next. Automate trades with limit orders instead of impulsive market orders. 5. Long-term investing versus short-term trading. Which is better? This depends on you. Your choice of short-term or long-term trading should not be dictated by how quick you want to make money. It should be dictated by your time, research ability over short or long-term, your emotional balance, size of your portfolio, and many other things, but not how quick you want to make money. Have a balanced approach. Hold 60% in long-term assets, trade 40% for short-term opportunities. Final thoughts: how to succeed in 2025's crypto market. Master both technical and fundamental analysis. Control emotions and stick to a strategy. Use risk management tools, stop-loss position sizing. Understand macroeconomic influences and regulatory changes. Be adaptable. Crypto is evolving fast. The smartest traders in 2025 will be those who stay informed, control risk, and manage emotions. The market is volatile, but with a strategic approach, the opportunities are endless. So if you found this valuable, smash that like button, subscribe, and drop a comment with your number one crypto trading rule. Let's grow together. Disclaimer: this content is for educational purposes only, not financial advice. Always do your own research before investing. That's all for this episode. Please like, subscribe, press the bell notification, and leave a comment. This information is geared to enable you to make informed decisions. May your decisions be profitable. I love you all. Bye for now.